Thanks so much for tuning into the management conversation with Welspun India. Textile companies haven't had the best of quarters. Welspun is no different. The idea of this conversation would be to try and see which of those pressures are ebbing and what do quarter three and quarter four presumably have in store, or does one have to wait arguably for the new season, as Kenneth and some of the others have told us, for actually realizing the kind of scale that the textile companies can indeed do in a particular quarter. Ms. Dipali Goenka, she's CEO and MD of Welspun India, joins us right now on the show. Ms. Goenka, good having you. Thanks for joining in. Hope all is well.
All well.
The revenue numbers, though, I'll come to the operational stress in a bit, but first the revenue numbers, about a 12 to 13% downtick. It's not as bad as what one would have perceived. How is the situation currently on the demand side? Because one would presume that with all that's happening in Europe, with the US looking like it's entering into a bit of a recessionary phase, the demand pulls would be much lower. How are you sensing this?
So, Neeraj, you're absolutely right. The macroeconomics and the inflation and the recession that's set in US and UK and Europe, where it's going to be a long winter because of the energy crisis that we see, it's going to be a tough one. And just let me take a country, every country, and give you a perspective. So the biggest consumption of home textiles in the United States is 34% of the world's capacity, right? And if I look at USA today, because of the freight costs that went up to 30% of their product, to the cotton costs or the others, I mean, if you look at the energy, I think everything expedited the whole inflation that went into the whole consumer. The challenge that we see in USA is that there was a lot of glut of inventory. There's a lot of, the inventory started piling on. The inventory still hasn't liquidated. And it's the end of the financial year, this quarter three of our financial year. So they all are correcting the inventories. The holiday season for a retailer like Amazon, the Prime Day, wasn't that great.
Yeah.
It was very weak. The forecasts in the United States for the retail holiday season also has been a little subdued and mild, owing to all these kind of challenges that we see right now. So definitely that has played a very, very big role. However, I must also add, USA is a very resilient economy, Neeraj. In the next couple of quarters, we will see USA coming back and springing back. I would look at and foreseeing it in the quarter one of our financial year. That is where we will see USA coming back. UK and Europe, again, the challenges have been very, very tough. The crisis was one thing of the energy bit. The consumer is not focusing on anything just to sustain itself and to keep the head over water. And I think that's what we are seeing in UK and Europe. So definitely they are all both different. Now, if I come to India, I think let me just also give you a complete scenario of India. Our OTEXA data showed that the India share reduced by 4 to 5% this last year. Why? Our cotton prices were 20% higher than the other countries. And of course, the freight played a very big role as well. So now if I look at where we are, I think when you talked about ebbing, I think for us, cotton prices, if you look at today, they are around still a 5 to 7% higher than where it began that kind of a run, the bull run. So we see cotton prices ebbing. The freight costs have come down by 58%. So definitely we see that. However, the energy basket still remains to be seen. So if I look at overall scenario, it is still soft, but we will take a couple of quarters, at least till the next financial year, to see where we are headed.
Is it becoming difficult to kind of reduce costs in a proportionate fashion because of all the factors that you mentioned? Because when I look at your numbers, the headline number is come off 15%, not a major drop, but the cost numbers have kind of stayed stagnant or in certain line items have gone up. Is that the reason why the margins have taken such a big hit? Because clearly that has impacted the bottom line performance too.
Neeraj, the raw material has taken the big hit. It is 80% of your cost today. You're talking about freight, that has become big. You're talking about the energy cost, that is big. So definitely that has an impact. So I think that's where I think it has played its role. But I think let me take you to a brighter spot of what we do at Welspun, and I must tell you that. So we have been working on our emerging businesses, and that has actually contributed around 30% of our revenue, and it is growing at a CAGR of 43%. What is it? Our domestic retail, flooring, and advanced textiles. And I think we all agree that India is the brightest spot on the world map today. Our GDP growing at around 13.5%. The retail business is being at 18 to 20%. I mean, it is very, very infectious. And for us today, I mean, I would add on, like, both my power brands, Spaces and Wellspun, are at 60% of the growth. I mean, growing at that rate. We are in 10,000 stores for the Welspun brand, highest distributed brand for home in the country. So
Mhm.
I think I would tell you that for me and for Welspun, I think that's where it's really growing. When we talk about flooring, our domestic flooring has grown by 138% for commercial and institutional. So, to give you an overall scenario, I think we have been working on the two buckets. One is your export, one is your, the whole emerging businesses. When, the global markets, as they come in, we run a 70 to 80% replenishment businesses. They will come to where it has to be normalcy. But it is our emerging basket that is going to be really big. So, I mean, I'll tell you, our domestic business was at 3% of our top line. And today in half fun, it is at 6.6%, which we are looking around 12 to 13% in the next 2 to 3 years.
Very good. Sorry, I did I hear you say that it contributed to about 30% of the overall top line? And if that is the case, sorry, yeah, please.
Not 30%, not 30%, 6.6% to the top line. We are $1 billion revenue.
Precisely, huh?
So, and going forward, it's going to be around 12 to 13%.
12 to 13%. Okay. You reckon that the next 2 quarters, which might still remain soft from the export perspective, or maybe slightly beyond, that will lead, that itself, those 2 periods will itself lead for the domestic ancillary business, if I can call them, or extension business, if I can call them, to kind of scale up on your overall revenue pie?
So definitely domestic business is not ancillary for us, Neeraj, anymore. The Indian markets are going to be serious businesses. And I feel domestic business, however, I mean, for us is going to be, we're already in 500 towns today. And for us, that's a big one. And we will continue to grow this while we grow our, revenue across globe as well. So I must also give you a perspective. So, when we talk about the globe and we talk about our exports, we are private label centric mostly. But for us, we have two licensed brands called Martha and Scott Living in the United States of America. They contribute around 30% of our top line. And in this kind of tough times as recession as well. So for us, I think a goal and a perspective is going to be towards the brands, Spaces and Welspun in India, and of course our licenses brands in America as well. So overall, to your question, yes, the markets are soft for the next 2 quarters at least. India is definitely going to be our major focus. But yes, hope is there, Neeraj. You don't know when these kind of dynamics turn. And maybe January, February, March, the Q4 could be something that we see could be an upside as well.
Well, hopefully sooner, but I'm just and hopefully, I mean it really. But just one question here. I think on the con call, if I'm not wrong, you guys have yourself mentioned, right, that the shift in the consumer preference towards, after 2 years of staying locked down, towards travel, towards experiences,
yes,
has led to reduction in the consumer expense on home, white goods, etc. Does that kind of cap the spending that a consumer would do on home improvement, on flooring, so on and so forth?
So Neeraj, now let me just give you a perspective on this. So what I spoke on the investor call was on, the focus on travel and experiences. And yes, that wallet share has gone there. For us, it has been good because the hospitality numbers look good in United States of America as well as globally. So that is an opportunity that, you'll see the hospitality businesses go up. But now if I come to what you're speaking about, the home segment, I think COVID time was an aberration. So the demand will come back to its pre-COVID levels for sure. And owing to what we do as a B2B business, I mean, it is all about how the inventory starts selling at the front end, which has been a glut. So as that starts getting mobilized and starts getting reduced, is the time when we start getting the focus on our inventory levels as well and our order cycle as well back. So I think let's not mix those two. Hospitality definitely is going to be growing. Experience and travel is part of that wallet share that the consumer is definitely spending on. We have a glut of inventory at the retailer's end. As that starts clearing up, is the time our B2B business will start coming in, and we are replenishment business.
Yeah, sure. No, actually, I was not trying to mix, because I was actually thinking that if you believe, or if actually that is a fact, that people are spending more on travel and experiences, then the flooring business and other stuff which goes into which is not an ancillary business, as you said, will the pickup in that be slower than what otherwise would have been the case? That is what I was trying to drive home.
So I'll also talk about flooring. I'm sorry I missed on that. I think flooring is again, when COVID struck, the institutions and the commercial chains actually stopped for us. Now that's the opportunity. That's where we are seeing growth happening, even in all across the world. So that's where we will see kind of an impetus of, kind of a push towards the growth that we're talking about in flooring. However, India is going to be, we saw a kind of 138% jump in our, commercial and institutional sale in flooring here. So, residential might be slowed, but the commercial institutions, owing to the kind of opportunities there, will be there for sure.
Okay, cross fingers for that. My final question, and I would want to understand, how are you looking at the two different heads over the course of the next 6 months? Your revenue numbers, I thought, actually held out, because 15% drop in such a scenario is probably okay. My question to you is, do you reckon that number, or the number at the pace at which you've grown in Q2, is that also under threat because of what's happening to the Western world? And then part two of my question, you face the brunt of higher cost, freight cost, energy costs, so on and so forth, in Q2 in a big way. Do you think that is already improving as things speak in Q3?
So interesting. And I will tell you that, the top line and the the Q3 numbers, Q2, our numbers have been the way they are, but I will not commit on Q3 and Q4 numbers at the moment in the terms of top line. They will hover around that. Whether they're going to be higher or lower, I can't talk about that, speak about it right now, because the times are so dynamic, Neeraj. We can't talk about it. Now let's talk about the costs. I think by the time they start kicking in, because there's a lot of inventory in the front end, you'll start seeing it in the financial year, the new financial year of ours. I think that's where we'll start seeing the real impact coming in. So that's where I would just put my thoughts.
Got it. So just trying to understand, you're saying that, and it's, because I don't understand your business as well, you reckon that the high cost inventory which has been there, carried on from Q2, could last for Q3, arguably Q4 as well, some part?
Yes, it will, Neeraj, because again, the sales have slowed down, so it'll take that time for it to consume, right? So that's where we definitely will hold that on. But yeah, Q1, the next financial year, is the time where we'll start seeing the impact of all the commodities also coming in, really.
Well, and hopefully the positivities from US kick in as well, and maybe a great year then. But thank you for the candor, Ms. Goenka. I really appreciate you taking this time out and speaking to us. All the best for the solar plant too. I believe you've kickstarted a solar plant, or setting up a new solar plant. So all the best for that as well.
Thank you. Thank you, Neeraj.
And a pleasure talking to you today, viewers. Thanks for tuning in.
Thank you.